Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Tuesday, May 26th. Hope you had a great long weekend. Before we get into today's show, tickets are now on sale for the Information's annual AI Agenda Live conference. It's taking place in San Francisco on September 23rd at SF MoMA, the Museum of Modern Art. You can now lock in early bird tickets. We have more details on our events page at theinformations.com/events. I encourage you to check it out. First up on the show today, the Information has exclusive reporting about how OpenAI is looking to scale its advertising business ahead of its eagerly anticipated IPO. Our e-commerce reporter will join the show to share with us what she knows. I'm also speaking with the CEO of Modal Labs about the company's roadmap after its recent funding round. It was valued at $4.65 billion. We'll get to that shortly. And we're also zeroing in on one software stock that has defied the broader declines in the sector, Twilio. But our financial analysis columnist says that despite the recent AI-driven surge, eager investors might be missing the bigger picture. It's going to be a fun show, so let's get right on into it. OpenAI is quickly trying to scale its advertising business as it looks ahead to its IPO. My colleague Ann Gehan published exclusive reporting today on the current state of that effort and some changes that the company has been making. I want to bring on Ann to tell more with us about what she knows. Ann, welcome to the show. It's great to have you here.
Hey, Akash.
Okay, so OpenAI is on this ads push. We know that it has big expectations for what it's going to do for the business this year. You went out into your orbit of advertising and e-commerce, and you found out how it's all going. What did you find?
Yeah, so OpenAI launched advertising earlier this year. There have been a lot of developments. Basically, every time I talk to my sources, even day to day, week to week, things are changing really quickly. So was trying to figure out, what all these changes and launches from OpenAI all add up to. You see that OpenAI is really taking steps to build a more mature advertising business basically as quickly as it can. They're really trying to compete closely with Meta and Google, who are the two kind of dominant players as far as digital ads go. And just, I think the pace that OpenAI is rolling out these new features, they're basically launching things as quickly as they can. And so this week, they're launching the first test of conversion-oriented ads, which measure success and bill advertisers based on whether or not users actually take an action, whether that's making a purchase, creating an account, downloading an app, things like that. So you really see OpenAI moving from just general kind of brand awareness with the first kinds of ads that they rolled out a couple of months ago to kind of some more concrete, more measurable outcomes, which is something that advertisers have really been wanting and really been pushing OpenAI to add.
So this is kind of interesting because I remember last time when you were on the show, and we've talked a lot about how OpenAI is positioning its product as a premium advertising product, and that certainly came through with the pricing, I believe, that it was
Right.
offering advertisers.
Mhm.
And so it sounds like they are very much leaning then towards an action-oriented result from the users, essentially. I mean, it's not enough just to have impressions on the screen.
Right.
They're charging based on an outcome.
Right. Yes, that's correct. I think you see with kind of the original ads that they launched, which you're right, were these very high priced, just more kind of general awareness oriented kind of ads. I think, there's obviously a lot of advertiser interest in running ads on ChatGPT, but I think despite all of that demand and all of that hype, I think very quickly advertisers said, okay, this is great. ChatGPT has 900 million weekly active users, but we want to see results. We want to know what we're getting for this premium price that we're spending. So I think that a little bit of that pressure is already kind of starting to build from some of the advertisers, and I think that is why you see OpenAI moving to roll out, first these click-oriented campaigns a couple of weeks ago, and now the more action-oriented campaigns as well.
So another interesting part of your story that fascinated me is you said that OpenAI is also focusing on smaller businesses. You talked about like dry cleaners as one
Eh,
example.
yeah, it's interesting. I think if you take a step back and look at kind of the sum of all of the tools that they're building and that they're rolling out, they are really oriented more towards small businesses that, want a very concrete return on their advertising spending. They want very measurable outcomes as opposed to a bigger name brand or a bigger name advertiser like Adobe or Target or Ford. Those were some of the very first advertisers that OpenAI worked with. They're more interested in, again, just kind of that general brand awareness, general kind of brand spending. Whereas, yeah, a smaller a local business or a really small e-commerce brand, they want very measurable results from their spending. So I think that thinking and catering, I think the tools that OpenAI is launching now definitely cater more to that second group of smaller businesses.
But help me understand. I mean, if we take the aggregate advertising spend of small businesses and we compare that to what it means to get a large advertising deal from Target or someone like that.
Sure,
I
yeah.
mean, I would have thought that that you really would have wanted to focus on the large businesses and that the small businesses, I mean, it's a much more fragmented segment of customers. Like, why is this like a strategic imperative for them to focus on the dry cleaners and the mom and pop shops?
Yeah, and it's not just the mom and pops of the world. I think, again, those smaller e-commerce brands, kind of small and medium-sized businesses, that's definitely a super, super lucrative, group of advertisers that there definitely is very fierce competition to own. And I mean, Meta and Google have dominated the advertising business for small and medium-sized advertisers for years. They make hundreds of billions of dollars in ad revenue from those advertisers spending, every year. And those businesses are really dependent on Meta and Google. There's a lot of kind of complaints about how beholden some of these advertisers are to Meta and Google, and any kind of new ad or new place to show ads that they can incorporate is really appealing. There's a big opportunity there. There's a lot of demand. I think if you look at TikTok's advertising growth over the past couple of years, that's a great example of just how much demand there is for new kinds of ads that aren't on Meta and Google. So I think OpenAI is really seeking to kind of capitalize on some of that demand. And yes, these advertisers definitely do have smaller budgets than the targets of the world, but I think when you look at
It
it,
ends up being
the
a huge
aggregate.
component of their marketing spend. I mean, this is I remember you coming on and talking to us about how, I mean, this is their marketing spend. You can actually build a business based
Right.
on the calculation that if I spend this much in Facebook ads or in OpenAI ads, for example, I can expect this ROI, and it kind of becomes a very uh,
Right.
solvable equation in some cases.
Right, and I mean, and Target's advertising, all different, in, dozens of different channels, and these small businesses, they're really only spending on a handful of advertising platforms, and so I think any dollars that OpenAI feels like they can win that would have been spent on Meta or Google, those are hugely important to them, especially right now, as they look towards an IPO. I think being able to show that ad revenue, let alone the fact that they're potentially taking dollars away from Meta and Google. I think that's really important to their business right now.
So overall, Anne, I mean, you came away from these discussions. I think it was what, $2.4 billion was the advertising revenue goal for OpenAI in 2026.
Yep.
I think we had reporting earlier this year that they were at like 100 million, which meant they still had a ways to go. I'm not sure. I'm not sure if we have figures to update that. But like, what is your overall conclusion here? Is it going well? Is it going not so well?
OpenAI definitely they have very big goals for growing their ad revenue. We've reported that they've told investors that they expect over $100 billion in advertising revenue by 2030, which would be more than 35% of the company's total revenue. Which so advertising is clearly a very significant piece of their business. But I think where for that to happen, I think OpenAI will continue to they'll have to continue to build out the advertising tools. I think you see just in the pace at which they're releasing new offerings, they definitely are trying to scale this up as quickly as possible and just kind of get, even if it's very early versions of something, get it released as quickly as possible and start charging advertisers for it, basically. But I think just in talking to advertisers and talking to agencies that are helping advertisers set up these ads, it's definitely, they view it more as an experiment still. It's, no one has a dedicated budget for ChatGPT ads yet. I think a lot of advertisers are still just trying to figure out what works. OpenAI has been even, releasing and thinking about new kinds of ad formats. So I think there's so much change that, and it's so new that no one really has a reliable strategy for this yet. So I think advertisers are still mainly treating this as an experiment, and we're not seeing any kind of long-term shifts of spending move from Meta or Google to ChatGPT just yet. But I think OpenAI is trying to do everything they can to prove to advertisers that, these ads are valuable and that they're able to provide the results that advertisers are looking for.
Great. Well, Ann, I want to thank you for coming on. That is Ann Gehan, our e-commerce reporter here at The Information. Modal Labs raised $355 million at a valuation of $4.65 billion. This was a funding round that my colleague Stephanie Palazzolo first published details about earlier this month. Today, we have Modal Labs CEO Erik Bernhardsson on the show to share with us more about his company's roadmap. Erik, welcome to TITV. It's great to have you here.
Thanks. It's great to be here.
Tell me, in the simplest possible terms, can you explain to us what it is that Modal Labs does?
Oh boy, I always try to explain to my kids, but Modal basically helps companies run AI. So if you think about all these cool companies out there building a lot of cool AI applications, whether that's Suno, which does AI generated music, or Lovable, which powers a lot of vibe coding, they all need infrastructure. So we help them with the underlying infrastructure layer. And part of why that's needed is a lot of traditional infrastructure. If you go to the clouds, the hyperscalers, et cetera, they're just not built for AI. It's quite hard to work with these large models, iterate quickly, work with GPU capacity, whether that's training or inference or sandboxes, a bunch of other stuff. So we built this underlying layer that helps engineers move much faster and helps you kind of abstract away in a way you don't have to think about that underlying capacity, routing, load balancing, all that stuff.
So when you say that the cloud providers, and I'm thinking about the hyperscalers, and then I'm also thinking about the neo cloud companies who we call them neo clouds. They call
Yeah.
themselves AI specialized clouds. But I mean, their pitch, their whole pitch is that we make it easy for you to run your applications on our cloud. And so I hear you saying that they're not actually well suited then to run the application. So help me understand why you think it is that your layer needs to exist and that an application can't just go straight to a cloud.
Yeah, there's a couple of reasons. Like the neoclouds are great, by the way. We use a lot of neoclouds. We work with a lot of hyperscalers. We consider them partners, a lot of them. What they give you is raw GPUs or raw hardware. So you have to still set it up. And typically the way you get access is you rent, for a year or 3 years or something like that, like kind of fixed number of capacity. So you still have to work with like sort of fixed capacity. A big problem is when you have a lot of these applications in production, your demand is actually very variable. You have this like, peaks and troughs and, that depends on your users. So a big part of the challenge that a lot of people face when they deploy things into production running on GPUs is this variable demand. And so we help them basically get very flexible capacity. We have a fully usage-based model. You only pay for the time the GPU is actually running. You can scale up to thousands of GPUs. You can scale down to 0. You only pay for that time. And we offer that flexibility because we pull together capacity from a lot of different neoclouds and hundreds of regions all over the world. The other thing is the developer experience. So when you get the hardware from these clouds, you still have to deploy the app, set up maybe Kubernetes and Docker and manage all of that stuff. So you need an infrastructure team. Whereas with Modal, we offer a much better developer experience. But with a few lines of code, you can just deploy something that auto scales completely as the demand comes in, scales up, scales down. You can hit it very quickly. You can have research team that can deploy things to production themselves. You can build very complex applications.
Right. So you compete with the Fireworks, the Base 10s, the Together AI, and now Modal Labs. I mean, this is what we call the infrastructure provider. That's sort of the segment of the market that you're competing in right now.
Roughly, yeah. I would say all of them and Modal, what we have in common is we think of ourselves probably, or at least like we think of ourselves. I don't know if they think of themselves, but as a kind of a second cloud layer. So you have the underlying cloud with the capacity, and then we sort of manage a layer above, making that easy to access, making possible for engineers to iterate quickly.
Right.
We offer LM inference as a service, but we also do a lot of other stuff. So I think we're a little bit more general purpose than many other players in the space.
So long term, I guess my question is, why does the layer that you live in right now, this second cloud layer, why does it need to be an independent layer? In other words, long term, I mean, this is a hypothesis I have. I mean, I could kind of see the cloud companies looking to you or to Together or to Fireworks, even the neo cloud companies, they're all building out their own software platforms as well. Uh, I mean, I sort of see the long term game here being a company like you getting acquired by a cloud provider. Do you not see that to be the case in the long run?
I don't think that's true. I think I look at, historically, you look at companies like Snowflake versus Redshift. Redshift was AWS's product. Snowflake was a standalone database. Snowflake is doing exceptionally well, even though they're running on a lot of hyperscalers. And we think it's something similar here. We're building a service higher up. The neo clouds and the hyperscalers, they're very good, and we work with a lot of them. And they're very good at offering capacity all over the world at a decent price. But it's quite hard to manage that capacity. But what they're very good at is putting that behind an API and making it possible to, they're very good at running data centers, physical capacity. What they're often not that good at is in my opinion, delivering good developer experience and delivering a software product that makes it possible to iterate quickly. And I frankly think of it as like a great partnership. Like we're building that layer above, and we're spending a lot of money on the underlying hyperscalers and neoclouds. And so in that sense, I think we don't necessarily think of it as a competitive dynamic.
Right.
We think of it as a partnership.
What are you planning to do with the money that you raised?
Well, we're planning to grow very quickly. We are hiring a lot of people. We're quite acquisitive, so we might go out and buy some companies in order to move faster, as well as
What do
also
you
acquire a lot of
think
capacity.
what are you looking to buy?
We like small teams that are extremely technical and maybe haven't had the commercial success they were expecting. There's a lot of companies out there that are exceptionally strong engineers building very cool things, and we would
I
love to
mean,
work with
I'm
them.
thinking, I don't know, AI coding, for example. That's a place where developers have been flocking to. Maybe that's an area that you're trying to build more compatibility with. I mean, maybe there's
Yeah,
more on the back end integrating with the cloud company. Where do you think you could see yourself actually making an acquisition?
I think there's a lot of interesting stuff in complex AI stuff, whether that's reinforcement learning or LM inference optimization, things like that. Another bucket of things we're looking at would be things like file systems and runtimes and like very sort of low level, Linux and deep sort of, management of infrastructure. A couple of different other buckets, but I think there's a lot of strong teams out there that we're very excited to potentially working with.
And so this is the other part that I have been interested about with your segment of companies is you are basically you are renting cloud capacity out from the cloud companies. Do you own any chips yourself at all?
No,
Okay, is that a plan? Do you plan to get into that business at all?
I I wouldn't rule out anything. I think everything is on the table. Like we are a software company, and being pure software enables us to grow very quickly and move very fast and being very capital efficient. More like a marketplace business, frankly. I wouldn't rule that anything out. Like it's possible we might own chips in the future, but it's not something we're like particularly desiring to do.
Right. Now, the developers that are your core customer base here, I wonder if you think about just the last 6 months and the trends with respect to how they are using your platform, things that have surprised you maybe. We've seen AI coding be very top of mind. We've seen token maxing come in and out of the periphery in terms of what people are focused on. What has surprised you about what developers have changed in their expectations the last 6 months?
Yeah, I mean, I think a big factor for us has been the massive explosion in sandboxes. So Modal started out 5 years ago thinking about this space as a very general purpose. Like, we wanted to build a platform with a lot of different tools, and so we saw a very strong product market fit initially with Infra. We've been working on training as well, seen quite a lot of batch jobs. We put out a product called Sandboxes about 3 years ago, and the idea is you can basically run third-party code in an isolated, safe way, typically LM-generated code, because we saw that a lot of people were using LMs to generate code. That exploded this summer. So we've seen tremendous growth and enormous traction with reinforcement learning, with vibe coding, with background agents. So and I think it sort of reflects a lot of the new world we're in, where engineers are running background agents and building a lot more code. And in many cases, under the hood, it's actually powered by Modal when they're doing that.
Yeah.
Or when some companies are training coding models, they're using Modal for reinforcement learning for their rollouts.
How is the issues that GitHub has been having, and I'm talking about the outages here, has that affected anything to do with your business or any integrations at least?
I mean, we were affected by it. We actually spent a lot of time like dealing with there was some merge issues. One of our engineers tweeted about it, and it went viral.
What did
I
he
think
what did he say? What did he say?
that GitHub is having some severe issues. I'm GitHub is a product that hasn't been well maintained, in my opinion, for quite some time. So, like, I don't know. Like, I think that the space would benefit from some more alternatives and some more development.
What haven't they done well that you think they could have done better?
I think GitHub it has all the engineers. It has an amazing sort of community, and the tools are quite good. But there's like constant small issues here and there. Like, I don't know. I love the product a lot. Like, overall, it's gotten us to a very good place. Where, I mean, I've used it for probably 10, 15 years at this point. But small bugs here and there that is sort of accumulating.
And I mean, for someone who I don't use GitHub, so I'm asking for a bit of an explainer here. Like, what is it, like? The product just hasn't innovated? Is that the idea, or like what exactly has been slow about it, and how could they have
Yeah,
innovated? I guess.
I think there's many things that GitHub could have done in the past. I mean, they were very early to AI coding. I mean, they had the Copilot very early. I think they could have actually been a more dominant player in that space. I think the product is just not caught up with all the development. I don't know. Again, like, I do like GitHub. I don't want to,
No,
trash
it's
GitHub too
it's
much.
interesting, because we the other story I was going to ask you about is we published a scoop a couple weeks ago about OpenAI possibly developing their own alternative to GitHub, and this is something that
Yeah.
we've been kind of interested in is companies finding GitHub less effective in some ways, and then maybe looking to build their own similar tools, the extent to which an AI native company could develop a better version of GitHub that could very much handle AI coding volumes better. I mean, do you think that is inevitable? If OpenAI came up with a product, would you consider buying that?
I think the community or the world would benefit from more choices for sure. And one thing actually, just to call out, like, since it's somewhat related to Modal, like, I do think with more agents writing code, we will need more sort of AI suited tools. We will need tools that enable agents to move faster, as well as engineers, of course, too. But so there are some like, very bullish on, for instance, continuous integration, like the ability to scale up and run tests at very large scale, which is a place where GitHub has been a dominant player. I think there's a lot of cool stuff you can build over the next few years that will enable both engineers and agents to move much faster. And hopefully some of those things will be powered by Modal. We're very excited about the space.
Great. Well, Erik, I want to thank you for coming on. That is Erik Bernhardsson, the founder and CEO of Modal Labs here on TITV.
Thanks. It's great to be here.
Shares of Twilio have been on a tear this year, up more than 30% in contrast to the 30% declines that we've seen from other big software stocks. The stock has surged largely because enthusiasm for its growing AI voice business. But my colleague Anita Ramaswamy argues in her latest True Value column that investors might be missing the bigger picture. Anita joins me now to share with us what she has learned. Anita, welcome back to the show. It's great to have you here.
Hi there, Akash.
Okay, Remind us, what exactly does Twilio even do? Let's start there.
Yeah, right. So Twilio is a platform that provides the infrastructure for companies to communicate with their customers. And that's across a number of different channels. Primarily, they've been known for phone calls and text messages. So when you get those push notifications, for example, or text messages from a company that, tell you that they're having a sale or that, something is in your cart and you should check out, their chances are that message would be going through Twilio or a platform like Twilio.
Okay. All the text messages that I hate receiving are coming from Twilio, in other
More
words.
or less. Yeah.
And the ones that I can never unsubscribe from, for God's sakes. I mean, I press stop so many times and Twilio, man, you're too good. You get me every time. Okay, but I know that it's not them sending in. I know that it's the businesses, and so we're not throwing them under the bus. But you wrote a column this week looking at Twilio's business, and their business, the share price at least, has done very well. Talk to me a little bit about why their share price has skyrocketed as of late, and then we'll get to your ultimate opinion on whether or not you think that is warranted.
Yeah, of course. So Twilio is kind of an interesting company to look at right now because it looks like an exception from this whole SaaS apocalypse that we've spoken a lot about on this show and been hearing about. They are a software company, but they grew or their share price appreciated more than 30% so far this year. And that's in contrast if you look at like the ServiceNows or other big software companies of the world that are down around 30% year to date. So they have really emerged as an exception to a lot of investors because they have this voice unit. And this voice unit, they do a lot of things, but essentially what they're doing is they're coordinating phone calls from businesses to customers. So oftentimes that will be like a customer support call or customer service calls. And what they're doing within that voice unit is they have an AI tool or an AI platform really that allows companies to build AI voice agents using Twilio's stack. So when we're hearing a lot about this rise of agentic AI and the rise of, voice agents, Twilio seems to be benefiting, at least in terms of their share price, from the fact that they have launched a product in that space.
So the idea being, if and maybe I'm thinking of customer support here, we've covered companies like Decagon and Sierra on the show, these automated customer service agents. Twilio, if I understand you correctly, they have this offering that they sell to customers where if I'm talking to a customer service agent or, if I get a marketing call or something, the business can actually use Twilio just to basically create an automated exchange with an automated agent type thing.
Yeah, exactly. And it's interesting because Sierra has a partnership with Twilio. They sort of cross sell some of their products, but then at the same time, they are also competing in some spaces. There's a lot of overlap, and this voice agent space is really crowded. But you can think of Twilio as the end to end infrastructure provider. So if you're a company, you want to use, let's say, a model from OpenAI or a model from a different large language model provider, and you want to put your custom user interface on top of that and have it speak in a certain way to your customer, all the toggles will be there on Twilio and you can sort of build it and then orchestrate and manage it from the Twilio platform.
Now, your column suggests that perhaps the stock price surge may be a little bit overestimating the company. Why do you say that?
I say that, Akash, because there are a number of reasons. The first is that AI is not really clearly making a super huge difference to Twilio's results, at least not yet. If you look at even just voice revenue, right? This is the thing that everyone's super excited about. When I talk to investors, when I talk to analysts, they all described it as the number one key catalyst and the reason why you should own Twilio's stock today. Even like the bullish investors I spoke to. And that voice AI category, we don't know what percent of their voice segment it constitutes, but their voice segment overall is only around 16% of their revenue in 2025. So far, it doesn't seem like the voice agents are really making a big difference to them. The other point I think that's important to note is about growth. So the voice segment overall has seen accelerating growth over the last 6 quarters. And that's a statistic that Twilio's management cites a lot. Just to show like their AI segment is, growing, or at least the voice segment is being catalyzed by growth in AI. However, the overall business last quarter also grew at 20%. So it's impossible to say that really the voice segment on the back of AI is accelerating this company's growth meaningfully. It's certainly a positive for them, but it's not like they're going gangbusters like a Micron or something like that, where they're really clearly benefiting from AI. So I just think that investors have gotten pretty excited to see a software company that seems to be bucking the trend in SaaS, but they should be careful because there are some risks inherent to the Twilio business model.
How are its competitors performing and how are their stocks valued?
There's not a clear competitor that does everything that Twilio does, but there are two companies that are similar in terms of the communications infrastructure players, Cinch and Bandwidth. They also do a lot of that text messaging sort of software that I was talking to you about earlier. Twilio is trading at near like 5 times revenue, forward revenue, and the other two companies are trading between 2 and 3 times. So over the last several quarters, the gap between the valuation of those companies has widened quite a bit. So Twilio is now, relatively valued higher than the other two companies by a lot bigger margin than they were a couple months ago.
Hmm. I wonder, as you talk to analysts and investors and folks in your orbit for this piece, this is all happening against the backdrop of the SaaS apocalypse,
Yeah.
and um, I say it, I'm grinning because we call it SaaS apocalypse, but in the story we can't call it that. We have to call it the SaaS apocalypse. But
Right,
I'm
right.
gonna stick with SaaS apocalypse here. I mean, what's the update here? I mean, I ask this because I think the consensus on the show has been, well, there will be winners and losers. Twilio maybe seems to be one company that people have dubbed a survivor, a winner, in that era. And yet, I don't know, like, and I'm thinking about it, like, if this is like an application layer company, if it's an infrastructure company, like, as you're reporting this, what did it tell you about which companies will end up being winners and losers in this era?
Yeah, well, I like that you said survivor, Akash, because to me, it's not clear that there are any strong
Winners.
winners. I've seen
Yeah.
some emerge in the hardware space, not so much software, at least yet. That could change. But when it comes to Twilio, I thought one interesting aspect of the story is that they are a company that historically has almost always had this usage-based pricing model where they're charging their customers based on just how much they're using the service rather than charging on a per seat basis. That is another reason why they've seem to be a beneficiary relative to other software companies. Because if we look at the AI world and if the number of seats or the number of employees at a company goes down, then a lot of traditional software companies are at risk because they don't have as many seats to sell into. Twilio doesn't quite have that problem. As long as businesses are using their tools, they will see usage and therefore revenue grow. But I think that that model actually brings some risks that investors and analysts are just now starting to surface and digest. One of those examples is, if customer service agents, because of AI, are that much more efficient, will customers actually spend as long, on customer support calls in the first place? And that could in turn actually hinder Twilio's revenue growth. So it's like the AI could get so good that that could pose a risk for them. That's just
Hmm.
one example of all the unexpected impacts that AI could have. I'm not saying that's already happening, just
Right.
saying it's a possibility for the future. So when we look at these usage-based pricing models, yes, relative to the rest of software, they're looking pretty attractive, but they do come with their own risks. And I think it's important for us to understand those fully.
One more question for you. Did you, over the course of your reporting, did you have a chance to intentionally or unintentionally speak with any of these Twilio powered voice agents at all?
I didn't speak to a voice agent, but I did speak to some Twilio customers, and I thought that was interesting as well. There seemed to be a little bit of dissatisfaction on a point a little unrelated to AI, which is Twilio's pricing is being driven by the fact that they have to pay telecom providers a fee. And the telecom carriers are constantly upping that fee, and it's forcing Twilio to keep raising and raising their prices. And so one of the startups I talked to is not even using Twilio's voice stack because they're frustrated with the core messaging offering. And this startup was saying that they're considering moving off of the Twilio platform just because they've seen these sustained price increases, because they're saying that Twilio charges a lot more for customer support as a percentage of their usage. So if they do more business with Twilio, then they're actually paying more for the customer service, which is kind of different from the pricing models employed by a lot of Twilio's competitors.
Well, it sounds like the telecom companies are really raking it in here because they're raising their prices on Twilio. And then I know that when I get the text message that I can never opt out of, it says that I will be charged for whatever the
SMS
rate
fees, yeah.
is for the text message. So I think the telecom company is just milking it on both ends here. Maybe there's hardware costs that I don't know about. Maybe they're investing in their own GPUs, for example. But an interesting column all around. Anita, I want to thank you for coming on. That is Anita Ramaswamy, our financial analysis columnist here at The Information. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media, on X, on Instagram, on TikTok, and on LinkedIn. I'm already excited for our next show tomorrow. Have a great rest of your Tuesday. Bye-bye for now.